6 types of tradable gaps that I really want to focus on are, first off, just the classic gap. And that's just going to be what you see, like on SPY on any given day when there's a move overnight. It's not like some crazy news catalyst. It's just, the market moved some overnight and that's created a gap on the daily chart of SPY. So when you get those between the open and close prices, it provides a very high probability chance of a retest of that gap. So you can mark those gaps on your chart and you can take a look at how price reacts once it reaches that area. And the reaction there will give you a lot of hints about the direction we're going. So there are partial gap fills. Like I said, not all gaps fill completely. And by identifying that change of character, once it trades back into the gap, you can snipe some really good long entries off the gap up. So, you don't want to buy first thing in the morning when a stock gaps up. About 70% of those moves do mean revert back into the gap to some level. But by buying, once you recognize, oh, there are still buyers here in the gap, then you can really catch a nice entry for a continuation swing. So you have the classic earnings and news gaps, obviously big catalyst, it's going to move everything. And like I said, they're driven by fundamental news. So depending on the news, you have to kind of put your macro cap on and really think about what the implications are for the headline. So those can be a little tougher, but if you are a macro trader as well, you can really catch some home runs here. You see the gap up, it's already on your radar because you like the fundamentals as is. The fundamentals improve, the stock price responds to it. It maybe dips just a little bit in mean reversion, and then you get that entry for the big push up. So that big push up would be considered a breakaway gap. And a breakaway gap is essentially a gap that initiates a new trend. So like I said, it's basing, things look good on the fundamental side, but there's no catalyst. Then boom, good earnings, boom, good headline, you get that catalyst, and that is initiating a new trend. After the breakaway gap, often you'll get runaway gaps or measuring gaps. And these are essentially continuation moves, and they accelerate existing trends and differentiate those from a exhaustion gap up, which we might have seen on NVIDIA. Exhaustion gaps are essentially gaps that signal a trend completion. They are essentially primarily positioning driven. And when you get a gap up and it instantly starts selling off, that's something you really got to watch for. Obviously, there are certain factors that matter here, and the biggest one is being very high volume. If a gap up is trading on like 500% of average volume and starts to fade, that's really scary because you get up to this big level on the gap up and then somebody big is just selling relentlessly. So that's something to keep an eye out. Those are the main types here. And there are different ways to trade all of them.